morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our wave counts. Don't forget that you can access to the whole service with daily videos, charts, trading plans, and more on ElliottWaveStreet.com. All right, so let's start here with the euro that has been going higher. That was the plan from the weekly chart. The plan is to validate the end of wave B in order to have wave C up with a minimum target at the previous high. So this is a huge distance. This is a huge distance and a fantastic trading opportunity to start trading from the beginning of the cycle. But in order to validate that this is the right setup and this is the right bias, we need to check the lower time frames. This is the 4-hour chart. On the 4-hour, we are seeing the price doing a nice rejection. We have been talking on these videos about the rejection and everything. Look where we are now. And the next step is to have a 5-wave sequence. So far, we have only 1, 2, 3, 4, and expecting another move up to make the higher high, right? So once we have the higher high, that's going to complete the 5-wave sequence. And after that, we're going to look for 3 waves down. And this is the first validation. I call it entry number 1. And here we're going to have entry number 2. So the plan will be to capture the whole wave 3, but we need wave 5 is pending. Right now, if price continues lower, this will be just a 3-wave sequence, and we are not going to have any way to add to the position. In that case, this will be just a connector wave, and we will need to have a lower low, and we will need to buy it here from the lows. That would be fantastic, actually, but I don't think that is going to happen. So I'm waiting for the move up this week. Let's have a look at the dollar CAD. On the dollar CAD, I have a fantastic trading exercise that I want to share with you. Last week, I triggered my trade at the 123.15. Of course, I posted this trade in the Telegram channel for our clients, and we're having a beautiful trade. But look, there is something really important. When you are seeing the price going down, is that enough to think that we should buy? Of course not. There are some webinars or some courses that you can watch when the price is in one direction, and usually the instructor says, okay, I'm an expert in Fibonacci levels, so if this cycle is going up, and then I'm going to find the retrace, right? So usually what they do, they start drawing levels, 23.6, 38.2%, 50, 61.8, 78.6, 88.6. And of course, when price goes down, if it's going to reverse, it's going to pick any of these levels or near these levels, and it's going to reverse, and the expert is going to tell you, oh, can you see that? It's so precise. This thing works. But of course, if you throw lines, it doesn't matter if they are Fibonacci or just the random numbers, eventually you're going to have the retrace at one of these levels. So that doesn't work. You know, buying because it's at the 50%, 61.8% is crazy. So from the professional point of view, what we do, when price is going down, we look for some buyers. We wait to see some buyers. This could be the big guys taking profit. This could be some accumulation, and price goes down again, right? So if price goes down and then reverses and moves above, that's an entry. That's a price action entry, because that's telling that they were buying before, and now we have some commercials moving inside the market, and we can go long from there. So if we bring this theory into the real life on the dollar CAD, the price was going down. We have some buyers, price goes down, it rejects, and we can buy. You see how simple are the institutional cycles, the smart money? So you might wonder, okay, but what if I want to do it here? Well, the price never moved back again to this area. So you didn't have any signal, right? Sometimes during the accumulation process, and this is something from the Dow theory, price can go down again. And in that case, we should trigger again. But this was not the case. But sometimes it can happen. We have to be ready for that. So I'm long, and here, and during the road, I leave a 30 pip stop loss. My stop loss was at the 122.85. The entry was at the 15, so no problem there. Once I reach the 1-to-1, I book my partial profits, half of the trade. So I keep half of my trade active. And here I'm looking to add to the position. So if the price jumps now to the upside and climbs, well, fantastic, I have half of the position. But if the price comes down here, I'm going to add another whole position, and I'm going to repeat the process to book half of the trades, half of the trade. So we'll finish with half here plus half here. That's gonna equal a whole position, risk-free position, completely risk-free position, to capture a wave 3. And if price already started wave 3 here, maybe I already have half of my position. So no problem there. And this analysis opens the door also to talk about the difference between using a small stop loss and a huge stop loss. Because some traders, let's compare actually the thinking of the amount of stop loss that we can use. So let's say that there is trader A, there is trader B. Both of them are using a 1% risk. Trader A is using a 30 pip stop loss. Trader B is using a 100 pip stop loss. So trader B is going to see what trader A is doing, and because he doesn't know actually how to find high probability bottoms, he's gonna look trader A and he's going to say, what are you doing there? That's crazy. You are going to get stopped out in a swing trade with that tiny stop loss. Wow, you are crazy. That's not going to work, right? So once trader A reaches 1-to-1, it's a 30 pips. But this trader B needs 100 points to reach its 1-to-1. So that's crazy. And usually what this trader B ends doing is taking profits at 50 points, for example. So in that case, he's using a 1-to-half risk-reward ratio. Huge mistake. So in order to make this system work, he will need to be making money 90% of the time and doing a lot of efforts and work. But that's the way he knows how to trade. So if he is good with the bias, he will end making money. But if he's not good at the bias and he, let's say, is at 60%, then he's going to lose his money. He's going to lose everything, you know. It's going to be a huge loss in the medium term. And now if we talk about trader A, he can have a 50% or 60% of success rate and make money. Something above 50% will be enough. But there is a but here. Trader A needs to have a precise entry. Something that trader B doesn't know how to do it. And in order to have a precise entry, you need to understand, well, to me, Elliott wave is important, of course, institutional cycles, smart money, price action, in order to capture these lows is extremely important, because in order to have a small stop loss, you need to be very precise. And you were seeing that in my trading here in the YouTube channel, and if you're a client, of course, you see it that too. The entry on the S&P. My entry on the S&P was this green candle. And that ability of finding the high probability reversals so fast near the lows is going to give us an additional advantage, because it matters, because having a small stop loss, it matters. It's something that really matters. It's not because the risk is the same with a 100 point or 30 points is the same. It's not the same. Not at all. So on the S&P here, we have the first entry. This was 3 in the morning, so I didn't take it. Then we have a nice validation here. Was too expensive, so I wait for a discount. I see demand, and I take it from there. That was my entry. I already booked partial profits, and I'm keeping half of my trade open, and more than 200 points. You know what that means on SPY or the ES, right? That's huge. So making good money here. If the S&P give us the opportunity to add here, fantastic. If we have this pattern and we have an opportunity to add, great. If not, if it continues higher from here, fantastic. Because we already have a good position and we are just following the trends. Traders, this really works, and it's not just Elliott wave. It's all the comments, the tips, the tricks that you can learn every day in our membership. Trust me, that is something fantastic. That is going to be a game changer. That is something to really, really add to your trading. Not only Elliott wave, but all my comments. Trust me that this works. So you can start your membership right now by visit elliottwavestreet.com/membership. Here you're going to find Forex, stocks, or the full access. You can trial any of these memberships. Here is the list of currencies or stocks or futures that we cover on a daily basis. So sign up now and start getting immediately access to this fantastic Elliott wave world with a lot of trading ideas, setups, and education. I'll see you at the other side. Have a fantastic trading week. Take care. Bye-bye.